Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. How are you?
I'm doing pretty well. Got an exciting weekend. I went back to Missouri for University of Missouri's homecoming, and you came here, so we did a
Yeah,
little flip flop.
we probably passed each other on I-70 both ways. But
Yeah. So no, it was a good weekend. Got to catch up with friends, family, and watch a scary Mizzou win. So it was all fun and
well,
good.
hey, they pulled it out though.
Pulling it out. That's the theme, right? Just keep doing
Yeah,
it.
yeah. That South Carolina game coming up looks a little more challenging than what we maybe anticipated.
Yeah, and I don't know if that's, credit to Shane Beamer and that South Carolina squad or Texas A&M just being a dumpster fire, but both can be true, I guess, at the same time. So anyway, looking at the markets, give me an update on the prices. What have we really seen across the past week?
Sure can. So over the last week, December corn down 2 cents to 6.81. November soybeans down 13 to 13.72. Soybean oil up 5 cents to almost 72 cents per pound. Soybean meal down $2.30 per short ton to $408.70. Old crop wheat for December down 23 to 8.38, and then new crop July wheat down 16 cents to 8.67.
So some losses there, but what's really led the way down in the market?
Yeah, so ethanol production increased for the third straight week, up over 300 million gallons per week, which is a good sign for ethanol production there. Export sales were strong for soybeans and soybean components, especially soybean meal. Open interest futures were flat again for wheat, down 2% for corn, while up 2% for Chicago soybeans. The cattle on feed report for our livestock friends, was within expectations, but live cattle futures rallied to fresh year highs. Export inspections were up for corn, soybeans, and grain sorghum, while down for wheat. Wheat exports fell below all expectations, while soybeans were their fourth highest volume all time. Corn harvest is 61%, 80% complete for soybeans, 45% complete for cotton, all well above their 3-year average. And then winter wheat plantings are 79% completed as of this last week.
So a lot of progress there on both the harvest and the planting side for wheat. So really, I'd like to use this episode here today to kind of get a pulse check. Obviously we're fairly through harvest now. Right around 2/3 the way complete across the board. So just looking at where we sit, how are you seeing things shake up on the harvest front and how that's impacting markets?
Yeah, no, good question. So I think we're far enough through now that we have a pretty decent idea of what the national average yields are going to be. I think we could see just a few revisions here and there, but for the most part, I think we've built in a lot of the expectation of changes in crop, especially the downward revisions. We kind of got, I don't want to say we got surprised, but certainly the soybean yield number here in October, was a pretty big revision, and I think that has all been baked in now, and I think we're just going to see some minor tweaks as we move forward. So I think from the production side, we're largely finished. The picture and the market expectation is quickly turning to demand, and that'll drive the markets over the next 4 to 5 months.
Well, just talking about that, with the supply side largely, figured out, becoming less of a question mark. What factors do producers need to be watching whenever they're trying to really get a better understanding on the demand front? What's going on? Maybe what trends could be heading their way?
Yeah, no. So all good questions, and there's a lot to watch and a lot of things to consider. I think I could probably break it down into two or three. So I'll just do my best here to give the three that I'm looking at. One, we're seeing large purchases of product when the U.S. dollar dips. To me, that's a big sign. Do I think the U.S. dollar can continue to increase? Sure, I can. And so I think the dollar has the potential to strengthen through the rest of the year, especially as you know. Our Federal Reserve works to tame inflation. Other countries struggling to keep up. I think that just makes our dollar a little bit stronger. So when we see these dips, I think we'll see some purchases come in. The second thing is the planted area in South America. I think that has a potential to be a big factor as we head into their growing season. I'm not even talking about just their growing season. I'm talking about their planted acreage, because I do think they are sitting on some substantial crop acreage that they've pulled out of pasture land to put towards crop production. And then the third thing is maybe this might be a little bit more premature, but as we look ahead to planting conditions here in the United States for 2023, the dryness that we're experiencing here this winter, carrying through the winter into next crop season. It reminds me a lot of what we kind of started to see in 2012, the dryness just carrying through the winter into the summer. So.
Well, looking back at 2012, yeah, I was playing baseball that summer when I was back in school, and I remember it was just the whole summer. It was I don't know. There wasn't anything like it. It's just amazingly dry. And kind of talking about that, I feel like farmers, as you go through this fall and into the winter months, and you're starting to see a lot of those water reserves not be replenished. We're seeing things like obviously the rivers going down and having issues with barge traffic. How nervous does that make growers as you get ready to think about maybe how you're going to go about planting the next year's crop?
Yeah, it's on producers' minds. I don't think it's front of mind at the moment. It's something I think as market observers, we probably watch just a little bit more because we're always kind of trying to figure out, these spreads, these deferred contracts as well. Producers are trying to get their crop out of the ground, depending on where you're at in the country. It's a matter of moving that product. Along the Mississippi River, as you mentioned, they're having trouble getting product moved. They haven't had that trouble for a while, and they're running out of storage. And so they're kind of learning a little bit from some of the Western Corn Belt folks about how to pile and store grain in giant piles at the moment. So I think those are front of mind concerns. The second concern that I think follows the transportation after harvest is input supplies and thinking about how we're going to source product, where we're going to buy product, what product we're going to buy here this year. I don't think this is a surprise to anybody, but farmers use input purchases in a lot of ways to manage tax liability. And so given some of the receipts that we're seeing this year, I do expect a lot of producers will potentially pre-buy fertilizer or seed or both, chemical maybe to some extent. So I think having those conversations over the next couple of months will also be in front of mind. So I don't think we're near to the point where producers are starting to think about 2023 unless they're planting wheat. But certainly a couple other things that kind of tie in with that as we look ahead. So.
Well, talking about that input front there, obviously last year that was the major headline or one of the major headlines coming out of the Russia-Ukrainian tensions there, causing issues when it comes to input prices. But how likely do you see those strong input prices continue to creep into next year as growers look to get those prices locked in?
Yeah, I think they're coming back, or I think we'll see. We'll see, but in terms of the height of prices or the peak of prices in this next year, I don't know if we'll see the all-time highs that we saw this last year on fertilizer and some other products, but I certainly think we'll see higher products as we move through the year. A couple of reasons for that. We're seeing a lot of the same things that led to the higher prices again this year, maybe just looking a little bit different, disguised a little bit different, but we're still going to have strong crop demand, and that's going to continue to pump up those prices. But then also shortage of energy, producing global shortages in fertilizer and industrial products, I think is going to be right there again this year. So kind of same thing, just maybe disguised a little bit different.
Talking about the supply and demand picture moving forward, one of the things we're seeing is maybe some more solar farms or a lot of that being contracted into this Midwest crop ground and farmland. So do you really see that as adjusting the supply picture moving forward to any notable extent?
Yeah, this is a good question. I think we are seeing supply, or let me put it this way, demand for crop acreage going to solar very, very impactful in local areas in some cases. So I know you're sitting in Ohio, and I have experience in Ohio. Ohio is probably one of the places where I saw this, the largest. I don't think we've come anywhere close to that type of pressure here in Missouri. There's a couple of reasons for that. Ohio is closer to a lot of population base when you think of New York and Pennsylvania and some of those places. But certainly, developers are interested in developing cropland, rangeland, what have you, for solar development. And so in those localized areas, that does have an impact on crop prices, cropland prices, because It's pushing up the demand for that. And it's also, in a lot of ways, slowing down some of the demand on the ag front, through the ag input supply chain for product. If you no longer need those acres for corn, you're not going to buy as much corn seed or what have you. So I do see it happening, but I think what we're finding in some of our research, or at least our data, is that land is being made up or picked up elsewhere in the country. So transitioning some pasture land, maybe here in the Western Corn Belt, into cropland to kind of make up for some of that that we're losing in different spots. So I'm not trying to beat around a sensitive topic, because this is a very sensitive topic for a lot of folks. My short answer is it has some big supply and demand issues, or at least it has some big implications at a very localized level where these solar fields are going in. In the national scale, it's not changing our supply and demand picture hardly at all, if any, because we're seeing some of that pick up in other places. It's unfortunate, because I know there's a lot of people within these communities where these are going in that are seeing their way of life changed. And certainly I think that's frustrating. And so I want to recognize that, but then also just say, from a national supply and demand picture, I don't think we're seeing much of any of an impact.
So moving forward, coming off of a light, maybe market moving news week this past week, what should producers really be watching to try and capture some of those trends?
Yeah, pretty straightforward week. We've got an ethanol report coming out on Wednesday at 9:30 a.m. Thursday, we have weekly ag export sales at 7:30 a.m. And then Friday, Commodity Futures Trading Commission data for those open interest and managed money accounts at 3 o'clock Friday.
All right. Always good information coming out of you, Ben. If you'd like to check out our counterparts, you can do so at the weekly livestock market update with Scott Brown from the University of Missouri and Brownfield's Megan Grebner. Looking ahead, we have also other content that you can follow us here at the weekly commodity market update on brownfieldagnews.com. Ben, thanks for joining me this morning. I'm Will Robinson on Brownfield.